The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and checking out where the markets are trading at right now. Looks like we got several things going on, but I'll wrap it on up, and we'll go through and do a quick market wrap for you. We got the S&P is flat on the day right now, down a quarter tick at the moment. We got the Nasdaq down 3 points, the Dow down 3, and the Russell down 2.3. So basically across the board, we're looking at the U.S. indices being pretty flat at the moment, pushing a little bit into negative territory. And sort of we do expect a down close today just based on, the massive rally we had yesterday. And then the seasonal trend usually shows that we end up positive for the week over the close on Friday. Usually seeing a little bit of a rally, a little bit of a balance to the upside, 55 to 60% to the upside on Wednesday and Friday, the day before and after Thanksgiving. But the biggest tendency being the one that starts on basically the close of Friday to the close of this coming Friday. Don't forget we do have those limited trading hours this week. And so Thursday market be closed and the Friday will be closing early. And looking on over, checking out some other things. We got our metals. We got gold down about 10 points right now. We have copper down about 0.5%. We got silver down almost 1% on the day. Corn is up 5 points. Soybeans is up 16 points. So there's a couple big movers for you. And we got oil after the ceasefire news coming out. Right now we got oil dropping down. So thinking things may settle down for the day. Anyways, over in the Middle East. And so the reports come out basically saying that there's a ceasefire being drawn up. And so Israeli and Gaza militants are agreeing to a Egyptian brokered ceasefire. And so with that news coming out from Reuters, then that gives, I guess, a little bit of hope that maybe that whole situation will calm down, which will be good, of course, for all the innocent people over there that have nothing to do with this and are living right in the middle of it. And, of course, as that's happening, oil is dropping and in the process. So we got that going on. What else is happening today? Looking over at our natural gases, up 2% on the day. And euro dollar looks like it is almost flattish, down about 12 ticks. Pound dollar up about 12. And Aussie dollar down 42. U.S. yen up 27. U.S. franc up 1. U.S. Canadian up 18. So except for the Aussie dollar, euro dollar, we are seeing some strength in the dollar as a whole. But not enough to really make a dollar play. So just pretty quiet and across the board. Now, what all have we had happen go on in the last 24 hours here that we can be checking out? Well, the Bank of Japan had some information come out, so we'll go ahead and check out those reports that got tied into the bank, and we talked about those last night. And let me back up a little bit so we can see a little bit more detail. And I'll tie it right on in there. There we go. And so last night, the Bank of Japan had some information come out. They released their monetary policy statement, their overnight call rate. That came out at 10:14, looks like p.m., So hop on over here to the 2014 hour. Not a big change that we saw right when that report did come out. Actually, I guess I got to go to 2214. There we go. Basically, the down move stopped. It went right into that as it came out. And then it took a while, but it decided to start moving. And that basically happened as the Bank of Japan press conference kicked off, which was at 2:30 a.m. And so that's right here. So that was the other part. Remember, we said there's two different parts on the U.S. yen trade. So the first part was going to be when they released their statement. The next one's going to be when they actually had their press conference. So the Bank of Japan press conference came out, and the U.S. yen started to rally, giving strength to the dollar and weakness to the yen. And it's been up about 60 points since that announcement came out. Looking on over, and we got Eurogroup meetings going on all day. So we'll see, just as the news leaks out piece by piece on that. And let's see what else we got. We got, moving on down, we got building permits. So came in at expectations. Housing starts coming in at looks like a 4-year high. So a pretty nice number on the housing permits. They did revise down the past number, though. And so you can see right here the chart on the housing permits release, and see that, you know, it's literally breaking new highs back since 2000. Let's see here. Yeah, a little bit late 2008. So breaking some of the 2008 housing starts. So that's obviously some good news to the market, but not that great of news. It's basically housing starts are really not a big leading indicator. A lot of the information is expected because just, you know, all the information they have about permits and everything else, and really has not had a big impact. Right now we see the S&P and everything else is actually starting to move on down pretty fast. As you may recall here, just a matter of a few minutes ago, we were saying how everything was flat, and now the markets are all moving down. We got the S&P down 5, we got the Nasdaq down 10, we got the Dow down 48, and the Russell down 4. So whatever's coming out right now, they are not liking it, and it is moving on down. But again, not a surprise. We should, like I said, we should be seeing a down day after the rally we had yesterday. Then moving on in, we had Bernanke decided to come out and have a little speech, and Bernanke used to be the big bull indicator. He's becoming the bear indicator when he hops on. And so really, he basically didn't rule out cutting interest rates on excess reserves, and he basically said, you know, hey, Congress, it's in your court. We've done everything we've done. We've done QE1, we've done QE2 and 3, even though those have nothing to do with money supply. And again, money supply is money being spent. So I get money, I buy a sandwich. The sandwich shop owner buys a car. The car guy buys a house. I mean, down the list, okay? Money's moving. And in money, basically QE2 and QE3 do not go into the money supply. At best, they go into the market by buying all the bad mortgages that are out there. And so really has not had any kind of big impact. If you want to read the announcement on the Federal Reserve, I'll give you that link real quick so you can hop over. You can check that out. And it comes up on federalreserve.gov, and you can see the speeches as they get posted. And it's sort of nice just to go through and look at the details on that. But you have the economic recovery and economic policy, and that's federalreserve.gov under news and events and testimonies and speeches. And you'll be able to see the speeches right there. Let's see here. News and events, testimonies and speeches, and then we'll go over to speeches, and you'll be able to see that. So again, federalreserve.gov, news and events, testimonies and speeches, click on speeches. And you can read the details on Bernanke's speech today. He talked a little bit about Hurricane Sandy. He went to, you know, some other details, but all in all, he didn't say anything that made the market super happy. And so therefore, you know, he basically just said, hey, we got a road ahead of us, and Congress has to fix it. So I've done everything I can do. And so that ought to be a good warning sign for you, that when the Federal Reserve is like, yeah, I've done what I can do. It's your turn now. So anyways, just checking that out. And then let's see, what else do we got? Go on and see what do we got coming up this week, because of course, you know, we got Turkey Day right around the corner, and so you know, definitely make sure you take some time off of your trading. And I know as traders we like to trade, you know, constantly, but it is important to take some time off and just be aware of some simple facts. Markets are less liquid at this time of the year, and so you want to, you know, trade with a lot of caution if you do decide to trade, and make sure you go in and you know, trade something like Nadex. If you have not opened a Nadex account, hop on over and just go to TFNN.com and click on the Nadex banner. Once you click on the Nadex banner, then click on Create Account. You can go from start to funded in as little as 5 minutes. Only $100 to fund a fully functional live account. No platform fees, no data fees, no broker commissions. Just exchange fees when you place trades. They're 90 cents a side, and they're capped at $9. That sounds expensive to you. Just think about the CME. They charge over $1.20 a contract. And so it's great. And again, the capping at $9. So whether you do 10 or 20 or 50 contracts, $9 on the order there. And if you want a demo account, click under our products and you'll see a link to a demo account. It takes you about 15 seconds. You can have it up and running before this segment is over. Just put in your username, first name, last name, phone number, and email address, and you can click apply for demo. It's a great way to trade during the holidays, because the holidays can be a little bit crazy and they can move a lot. So don't trade where you can get stopped out in half a second because the market moves 5 points because there's no volume to stop it from moving. Trade something like Nadex. Straddle it, strangle it, you know, pick your direction with defined risk, however you want to trade it, but trade it with completely defined risk. And so you can hop over there. You can get access right away. Like I said, you can go from start to funded in as little as a few minutes. And check that out, and you'll be glad you did, because it can be pretty disastrous to an account if you trade on the holidays and you don't know what you're doing there, just because, like I said, it can kill you because the market can move so fast when the volume gets sucked out on Wednesday and Friday. Okay, and let's see, what else do we got going on? We just talked about the reports that have come out. Let's talk about anything that is coming out. And we don't have really anything going on tonight that is worth mentioning. Hey, we'll roll on over. We'll check out tomorrow. Well, tomorrow we do have a British pound setup coming in. We got the MPC meeting minutes and the public sector net borrowing coming out of Britain at 4:30 a.m. Eastern time. And what they do is they report the interest rate votes and that are on the calendar, and the minutes are also included for the latest asset purchase facility votes. So basically, sort of like the meeting minutes on Fed funds rate type thing. And so you want to go in and you want to be watching that report. That will have an impact on the pound dollar, and it'll show the results and the forecast and the actual numbers. It'll probably come in the exact same as it did last time, but again, they're going to be looking at the minutes to see what did they say. And then we're going to have public sector net borrowing also at 4:30 Eastern time. That's going to affect your pound dollar. And looking on over here, the difference in value between spending and income for public corporations, the central government, and local governments during the previous month. So basically, how are they spending and how are they borrowing, and all that coming together, basically helping show signs of what do they think the future of the economy is, and are they investing money into their company to grow it. But again, that'll affect the pound dollar at 4:30 a.m. Eastern time. Rolling on over, we're going to have unemployment claims right here in the U.S. at 8:30. Again, light volume, okay? So be ready for a very possible big move if that number is off by any significant amount. And again, unemployment claims at 8:30, and could see a couple decent trades come out of that. So again, U.S. dollar, you could trade the U.S. dollar, you could trade any one of the major indices. But right there, 8:30 Eastern time, that's your trade for tomorrow. You'll also have your crude oil inventory report coming out on Wednesday. And they're also going to release the natural gas storage report on Wednesday. Okay, so usually they release that on Thursday, but since the market's closed Thursday, they're releasing your natural gas storage report on Thursday at noon. So crude oil inventory is at 10:30. Again, be careful. Any number off, low volume, could definitely move a lot. So it could be a good straddle play. Same thing on natural gas at 12 o'clock. And then let's see here. China tomorrow night. And you won't have long to trade this before they shut everything down. But China has their HSBC Flash Manufacturing PMI report coming out. And so you'll want to be watching that. Let me go ahead and get you the links for each one of those reports so you can follow right along on them. The MPC report is going to come out of the Bank of England. And so, again, that's bankofengland.co.uk. And so you can keep an eye on that. Again, that's your 4:30 report. And we'll pull up the other links for you when we get right back from this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour, and we are checking out a few different things. So what we're looking at right now is just looking at the different reports, making sure you know where to find those. So we got the tomorrow, or let's see here. Wednesday, we're going to have, all right, we're going to have the unemployment claims. So you can find that over on the census site there, Department of Labor site, sorry. So DOL.gov, you'll be able to find the unemployment claims. And then over, we've got public sector net borrowing in Britain. You'll be able to find that on their stats site, which is ons.gov.uk. And if you're in the Tiger's Den, I'm posting the exact links to where these reports will come on out. And then if you go over to Bank of England's website, you can find the MPC meeting minutes. So again, Wednesday we got 4:30 a.m. trades on the pound dollar, and then 8:30 we got unemployment claims. And then later in the day, China's going to have its PMI number come out. Anytime you want to find PMI information, just go to marketeconomics.com. So China will have their PMI coming out at 8:45 tomorrow night. And then scrolling on over and looking at Thursday. On Thursday, we're going to have the French Flash Manufacturing PMI. And again, that's going to be at marketeconomics.com. And the German Flash. So French Flash will come out at 3, and the German Flash PMI will come out at 3:30. So a lot of PMI numbers coming out here Wednesday night, Thursday morning. So that'll be a good euro-dollar trade for you. Again, 3 and 3:30. And then moving a little bit forward, we got the Spanish 10-year bond auction. It is tentative. The time is not set, but that will definitely impact the euro-dollar. And you go to tesoro.es, tesoro.es, and you can see the balance and the statements and everything that's coming out on the interest rates. So if that number starts to climb, that's when you got to start worrying. And so we'll see what happens. But so far, basically there's no big concern right now, especially with the U.S. having a bank holiday on Thursday. Of course, it will be closed on all the major indices there and most major products on major exchanges. And then we got core retail sales opening in Canada on Thursday morning. So that'll be available over on the Canadian Stat website, so statcan.gc.ca, okay? statcan.gc.ca. And so you can go in there, you can choose English or French, and then you can go down and you can find the details on the core retail sales. So that's U.S.-Canadian trade. Also, Japan will be closed on Thursday for their own holiday. So they have a Labor Thanksgiving Day, observance of Labor Thanksgiving Day. Don't know the details on that one. All I know is Japan is closed. That will quiet down, obviously, any U.S. yen trades with both markets being shut down. Moving on over to Friday, we're going to have the German IFO Business Climate Report. So that'll come out of the IFO's website, which is cesifo.group.de. So cesifo.group.de. cesifo-group.de. And so what is that? That's the level. It's a composite index where they survey a bunch of manufacturers, builders, wholesalers to see what they think about what's going on. Also, there'll be an EU Economic Summit. Day 1 is Thursday. Day 2 is Friday. So that could have, obviously, a large impact on the markets. They're trying to figure out how to piece together the puzzle of the Greek debt. And moving on in, we're going to have another Canadian trade 8:30 on Friday morning. You're going to have the, let's see here, we're going to go to statcan.gc.ca again, where you're going to have the core CPI number coming out on Friday morning for Canada. So, obviously, not really any U.S. reports coming out on Friday here in the U.S., since pretty much everybody is at home and trying to recover from the turkey and then, fighting over who should have really won that football game, right? So, I think we got the Redskins playing the Cowboys, which will be awesome. Coming up, so Cowboys are my team, and I'll be rooting for them. So I know some of y'all are not, but that's okay. And everybody's entitled to be wrong, or to their opinion, I mean. And we'll see how that turns out. But just make sure you trade safe around the holidays, and obviously, be safe. And let's check out what else we got. We got our deviation levels. By the way, if you haven't checked it out, definitely go over and check it out over on TFNN.com. But we can go on over and we can check out the diagnostic trading over here. So you go to diagnostic trading, click on that, and you get a 2-week free trial. You can try out the box spread scanner. You get access to tutorials on binaries and spreads on Nadex. Also, you get access to my daily deviation levels. They cover the S&P 500. They cover the Dow. They cover the NASDAQ. They're going to cover the Russell. They're going to cover oil, natural gas, corn, soybeans. Let's see, what else we got? We got gold, silver, copper, euro dollar, pound dollar, Aussie dollar. So U.S. franc, U.S. Canadian was what the deviations cover. So quite a few markets that you can get in, you can take advantage of. And let me log in here. I'll hop on and I'll show you exactly how it works. And let's check out just sort of how the markets have done, even on this quiet day that we have right now. But the markets are still pushing on down. We're going to see how it goes before it all wraps itself up. Stay right there, folks. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, here we are back to the Diagnostic Trading Hour, and we're checking out the deviation levels. So let's go ahead and check that out. So if you log in, now we post those live on the home page there. If you remember the diagnostic trading area, just go ahead and click on diagnostic deviation levels. You can check out the current ones right there. And like I said, they post live every night. And so we can see over here, we got, let's go ahead and pull up a few markets and see what's going on. All right. Well, let's maximize the grid cell. And I get comments about how on target these are all the time. Extremely helpful for helping you take profits. So we were looking on the short side for a move down to 1375.9. Well, I'd say we got it, right? So 1375.9, stopped and moving back up a little bit. And so you'd want to be tightening your stops. How would you do that? Well, one of the methods you could use is, let's say we're hopping over on 10-minute bars. Then you could be tightening your stop at the close of each bar. Or you could just get out. So either one would work for you. The next stop tightening would happen at 1373.3. So that would be our next target, and haven't quite got there. Got pretty close. We got a low right there at 1374. So we do need a few ticks below that mark right there to keep on going. But definitely 1375.9. So we're pretty much sitting at that level at the moment. And we can hop on over. Let's go ahead and check out the NASDAQ. And over on the NASDAQ here, we had an expected move down to 2573. And we can see we made it down to 25, looks like 68. So 2568. The next move expectation down is actually 25.67. So we're literally 1 point off of the low there of what we'd expect it to get down to 25.67. And so a little bit more move, and but we definitely had that first tighten stop, and now we're looking for the next one. And if it's within like basically a point or two at most, then usually we're going ahead and we're tightening the stop anyway. And move on over to the Dow, see how that would have helped you out going short this morning, just expecting a down day after having the up day yesterday. And right now we had a move on the Dow down to 12,681 was the expectation. Well, we hit that right about there. It moved a little bit lower down to 12,666. Got to watch out for that one, right? And so next move expectation, if it did decide to move down, would be 12,658. But so perfect stop right there, right on the deviations. And then going on, and let's check out our small caps. On our small caps, moving on down right now. And we'll see where that went to. Let's see, got it down low. It actually hit that like right after the close. You can see this right here, just bam, right this morning. But move on down to the low side of 786. And we expect it to move down to 786.6. I am not making this up. It's right there. Okay? So sort of nice. There's no twisting your head sideways trying to see it. It's just the numbers are right in front of you. Hopping on over and checking out some natural gas. And we can even go in, and one of the things you can do is you can go in and you can turn off or on the extended sessions. So you can look at overnights, because we are actually including the overnight in that. But we had a nice big rally today. So far, we're actually pushing up on highs right now. We got highs up at 3.815 over on natural gas. We had an expectation of a move up to 3.761, tighten the stop, 3.777, tighten the stop, move up to 3.803, tighten the stop. So right now we'd have our stop tightened and looking for 3.844 as the next possible level, but that is at one deviation, 3.803, which is right here. You can see as soon as it hit that level, what happened? It just started chillaxing out. So that's what we expect. We don't expect it to make big moves past. It may go past the one deviation. We don't really expect it to go past the one deviation mark. And on quiet days, we don't expect more than half a deviation. So, but hopping on over here to oil, and we do have all those levels of half and single deviations, as we all the way up to 3 deviations are posted on the site. Oil, we had to move on a low there down to 86.19. And we had an expectation, let's see if that was 86.19 on the low. Our expectation on oil was a move down to 86.76, and then further on down, if we went further, 85.93. So we got 86.76 right here. We're going to be tightening our stops up. So we tighten them again, you can tighten them again, and you'd be stopped out at this moment on oil. And you would have caught a really, really nice move. So you're talking, about 250, so about $2,500 move right there in the oil futures. Let's go ahead and let's check out some gold. What's going on in gold? It's starting to take a little crash down along with the rest of the market. And it pushed down to a low, just recently pushing down on the lows for the day at 1721.8. And so if I look at the low on gold, we had an expectation of 1721.6. So literally just 2 ticks away. Like I said, if you're within a point or so, tighten that stop up. Don't let it get back on you. But looks like it may keep on moving on down there. But we got 1721.8. We're expecting 1721.6 for a full deviation. And it literally pretty much hit that on the close. So gold, the Globex is still open, but the pit has closed down. So, and let's go ahead and check out a couple other trades that we got going on. Let's see here. We got some silver. So checking out the silver contracts, it also just closed down on its pit. It had a low today of 32.86, and we had an expectation of a move down to 32.82. So worked out really, really well. Within just a few ticks of that, would have been a great place to be tightening your stops, especially if you see it go down and get within a couple ticks away, starts moving back up. You're definitely going to be tightening your stops very, very shortly. And we can hop on over. Let's check out some copper. And copper's been a little bit choppy today. Hadn't done anything extraordinary, but we can see what it did do. And we got a low right now. Let's see, 3.506, or currently 3.5035. And we had an expectation of a move down to 3.506, which was the low of the current trading day before it went into basically the overnight just before it popped back up off there. And that was a perfect half deviation stop and reversal. And then hopping on in and checking out, let's see, we got our copper right there. Moving on into the corn market, we had a little bit of move on corn today. Sort of started to fly up after being quiet most of the night, and it moved on up to a high of 746.5. We had an expectation of 744.8 and then 747.4. So it has not broke a full deviation yet, but it definitely has hit that 0.7 deviation where we're going to be tightening our stops. And if I was you and I was long, I would have been stopped out already. I would have tightened my stop right here and gotten knocked on out at 743.75 is where I'd be out on that trade right now. So looking on over at the soybeans. So checking out our soybean market. And where we're at, we got a nice little dip, and then it decided to push on up high, and we got a high right there at 14.16. We had an expectation of soybeans to go up to 14.11.1, and then the next stop being 14.19.3. So I don't know if it's going to hit that 14.19.3. Definitely hit that 14.11.1. As you can see, when it did hit that 14.11.1 right there, it went flat. And that's our one deviation, perfect one deviation move. Went ahead and chilled out, and that would have been tightening your stops, tighten them, and just stopped out just now with a low below, let's see, 14.12.25. So not a bad run. Be able to go in and capture, I mean, what is that? Oh my goodness, I mean, you would have got in, let's just say you got in here, so we don't pick that perfect little low, right? And so you got in on the high of this 1396.5. Yeah, I mean, you're talking nice, 15, almost 20 points there. So nice day right there on soybeans. Very easy trade. And again, you can trade soybeans on Nadex, limited risk. So try to do it without it, and you may be sorry, because soybeans can move pretty crazy, pretty fast, as you just saw. And we got the Aussie dollar moving on down to a low of 1.0356. So 1.0356 and 1.0361 was our one deviation. It hit the one deviation. Call it quits for the day. Tighten the stops and pack your bags. It's time to go home, and be glad you caught that move. So again, perfect one deviation move on the Aussie dollar. Checking on out, moving on over to the euro dollar. Euro dollar, we had a move, and it moved on down. First off, started off to the low side, and we had a move on down to 1.2764, and we had an expectation of a move down to a one deviation move, was 1.2762. So showing you a perfect deviation reversal play that you definitely could have taken advantage of, and it moved on back up, filled in that gap on that deviation, and basically just hadn't really done much since. I mean, had a couple spikes in there. But, that'd be where you'd be looking to possibly do a short play. You'd have multiple short plays this entire process. So, but a perfect long reversal right there. An easy play, too, like right there at night. So, what is that, 7 o'clock at night? Moving on down to that one deviation. And a great thing to do is go in and set up alerts for these deviation levels. And it can help you sort of know, okay, now I want to hop in and check out trades. And looking on over, we got pound dollar. Had a little bit of a rally this evening here, and started up really strong this morning. It's giving a lot of that back. But we got the pound dollar up at a high of 1.5935. And the pound dollar there, 1.5935. We expected it to go up to 1.5939. So that would have been a half deviation, a little bit quieter move. It looks like a rally, but euro dollar was the big mover in the overnight session. But basically hit right there within just 4 pips of the deviation. So perfect point to be pulling your stops. When you get close, then if the close of that bar doesn't break it, then you're going to want to be tightening that stop on up. Looking on over at the USD yen. USD yen moved on up to a high of 81.75. And we had an expectation of 81.72 and then 81.85. So it definitely hit the 81.72. When it hit that level, flattened out, and didn't move on up to 81.85. Probably won't hit that today. And but that would have been a great point to be taking some profits on a nice US yen trade. And then scrolling on down, we got 2 more currency pairs to check out. We got the USD franc. And so let me pull that up right there for you, and we'll see how it did. On the US franc, it flew up and then gave it all back. So on the high side on the US franc, we had a high of 0.9428, and we had an expectation of 0.9424. So it would have been a perfect point to be tightening stops if you were getting that big rise. I don't know if you would have got that one right. I mean, you had to be planning that. But you could have had some good reversals off of the half deviation. And maybe you didn't get the first one. Maybe you didn't get the second one. But the third one ought to be a clue, okay? So a good point to take it when it hits that. I mean, hit it basically 3 times over. Let's go ahead and go short this time around. And you could have got a nice reversal, a full half deviation you could have captured in there. And, wouldn't have been a fortune, but would have been an easy 20 pips. And hopping on in and looking at what do we got over on the USD Canadian. So on the Canadian, after a bit of a weird night going on, it decided to go ahead and rally at the end there. And it's really been playing around that one level. We got it sitting right now at a high of 0.9990. And we had an expectation of 0.9986, and then a move on up to 0.9997. So literally just a few pips off of that high there of a one full deviation move. I definitely, if you're in this trade, you need to be tightening your stops and be happy. Don't be greedy. Enjoy the money. And so, anyways, but the markets, following those deviations. Why do these deviations hit so on target so many times? Oh, it's not because it's a magical formula, and we didn't get it from Hogwarts or nothing like that, right? All it's about is implied deviation, expected move in the options. So what we do is we take the implied volatility out of the options market. We then take the four options, basically the at the money, the in the money and out of the money calls and puts of that contract month, and then of the next 3 months if we can get data. And then we'll take those 16 implied volatility numbers, we'll make a volatility index, sort of like a VIX, and then we'll tie it into a unique deviation formula that's made for 1 to 5 days max. And so what it does, it gives us the expected move of the market for basically what does the market expect for the market to do? Not what did it do, like seasonal, or statistical deviation. Not some funny formula like looking at, pivot levels, and, not something like ATR, which has nothing to do with the movement in the next 20 minutes, only has to do with the last 20 bars or whatever. It literally is, how far does the market say the market's going to move? And that's the number we're coming up with in the diagnostic deviation levels. And we'll keep adding to that right now. Right now we got pretty much just almost all the Nadex markets in there. Pretty much all the Nadex markets we have in there. And we'll be adding in like 40 more futures contracts. And then stage 2, we'll be going into about 3,800, or actually I want to say 2,800 stocks, ETFs, and indexes. So as long as they're optionable, we'll be putting them in there. And we'll just keep expanding it and making it bigger and better. But we're getting a lot of great feedback, and glad y'all are enjoying that. And let's go ahead and check out, the market's just been going a little bit crazy. I want to go back and just check out these indices. They moved down. I think they paused out. Yeah, we got the pause button on now. So we'll see where they end up for the day. And let me check out over here on the NASDAQ. I have a couple trades on, so short the market pretty much across the board. And going pretty well. So I like it. So I went short some spreads, went short some binaries, and so I'm loving it when it lines up and the plan is coming on together. And so checking that one out, gold definitely did a drop right there. I was hoping it might go up, but it went on down with the market. And we got the pound dollar. I missed out on that trade. So I did have a buy signal, but it just took off before I got a chance to take advantage of it. And but anyways, a great trade nevertheless. And it's one of the things that I always wish I have something I don't is have something I wish I didn't. So that could be your thought to chew on for the day, okay? And one of my mentors taught me that, and it has saved me a lot of heartache. And when I broke it, it has cost me a lot of heartache. But again, I would always rather I wish I have something I don't as have something I wish I didn't. So just keep that in mind next time you want to chase that trade, okay? All right, stay right there, folks. We'll be right back after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just looking at a few different things, a few different ways to trade. And one of the things also just, interesting thing came up in the Tiger's Den. Saw some decent reports about just all these succession stories going out of people wanting to get out of the United States. I think we need to fix it personally, not just leave it. But anyways, from Texas, I can definitely see where they're coming from. We do have that right in our Constitution. And right here, it's sort of an interesting site. If you want to go check it out just for fun. But I don't know if you want to sign up for anything on it, but if you wanted to just check it out and see what people are petitioning for. But there's a petitions.whitehouse.gov. And you can go through and you can actually see all the petitions. Like, this is basically, if it gets 25,000 people, then the White House basically has to respond to it. And so this one has 30 days to get 25,000 votes. And this one had to get 25,000 by December 9th. As you can see, Texas is trying to get out. Has had 115,000 petitions. So it'll be interesting to see how they reply. And you can make your own petition. You can do it. There's actually a sort of a funny one on here. It said, basically deport everybody who voted to get who petitioned to get their state out of the United States. So I thought that was sort of a humorous reply. And it almost has 25,000 votes. Let's see here. But there's a bunch of them on here, and they got all sorts of things. But basically, it's a constitutional right to be able to let your voice be heard. and this is how they do it. This one for 36,000 votes for impeaching Obama. So, but anyway, so then there's some just crazy stuff on here too. And I mean, not that all this isn't probably crazy, but there's stuff, legalize pot everywhere, make it good for everybody. I don't know. But then you got all the states, like literally just about every state on here has a petition built in. And a lot of them are starting to pass 30,000, which is really interesting. Like, this hasn't happened before. We have all these states. But now Tennessee is above the 25,000. You got Georgia above the 25,000. So a lot of these states are actually starting to get up there. Michigan and, on down the list of all these states trying to petition to get out. And but anyways, check it out just for fun. It's fun. It's a fun topic to talk about over Thanksgiving dinner. But anyways, I hope everybody is having a great day. I got John there from Deep South Texas. I think he's signing the petition right now, and I personally can't blame him. And Perry sort of joked about secession before he decided to run for president. He joked about it, and right now he has made a comment on this actually since it started up. He basically said, well, I think we need to work out our issues here, but there comes a time and point where people need to take things into their own hands, meaning he's not completely against it. So, anyways, it'll be interesting to see. I mean, this election, yeah, I know that Obama got a bunch of electoral votes, but when you look at the popularity vote, I mean, it's very, very split. And that seems to be happening more and more lately. But the split vote's not the big issue. The big issue is the chasm of difference between both sides is getting just ever larger. And if it continues to get larger and larger, I mean, it's federal government and state governments are going to start standing off. And I mean, they're already starting to do it, as we've seen over these last couple of years. And I think it's just going to get worse and worse. And, there's just some major issues out there. The healthcare, I mean, it's a big issue. It is a mess. So they didn't reform anything. They just made a mess. And I don't know who it benefits, because if you're poor, you can get it. Well, you could have got it before. If you're middle class, it just got more expensive for you. Okay? And I can't even get it for my son until he's 3 months old. There's no insurance out there for my son unless they're on a group plan. And so my wife actually had to go back to teaching just to get insurance for him because of Obamacare. So, but hopefully she'll be taken off this next year. But anyways, you can blame whoever you want, but at the end of the day, bad regulators, bad congressmen, not getting this stuff right. I hope you have a great Thanksgiving. I'm going to be taking off a couple days and enjoying time with my family, and I hope you do the same. All right, stay right here. We got great shows coming up for you.